Hi everyone, welcome back to the UK crypto tax video series that I'm doing with one of the leading crypto accounting companies around called Miner. And this will be part 6 and the final part of that series. So if you haven't watched the first 5 parts, I think it's better to watch these in order if you're interested in finding out more about crypto tax in the UK, because we've covered the basics such as when capital gains tax versus income tax might apply, to more complex areas such as airdrops, crypto loans, etc. And I've included links to these above and in the description of this video. But I'm pleased to welcome back to this video Jamie Nuttall, who's the head of crypto tax at Miner, who'll be answering some questions on UK crypto tax for us again. If you are interested in getting specific crypto tax advice based on your personal circumstances from one of the best crypto accounting firms around, then I've included a link in the description of this video to contact Jamie at Miner directly. You just need to make sure you put my name and YouTube channel in the online inquiry form, just so they know where you've come from. And if you're interested in seeing your crypto tax position yourself and using an automated crypto tax platform, then I've included a link to Coinly in the description of this video, where you can sign up for a free account and view your potential capital tax gains, losses, etc., with you only needing to pay once you need Coinly to produce a tax report for you. So please do like this video and subscribe to the channel so I can continue to offer more content for you in future. A quick apology from me that I seem to be losing my voice and I'm not 100%, but hopefully it doesn't affect the video too much. Just a reminder that nothing contained here is financial or tax advice, and let's jump straight in. If we move on to crypto cards, if that's all right.
Oh, as in sort of crypto.com type debit cards and
Exactly, uphold crypto.com, whatever it might be. So if you hold crypto on a crypto card,
yeah.
one of those crypto cards like a Visa, MasterCard, debit, well, prepaid type card, and you spend this, and there are different ways. So some of them the provider of it converts your crypto into GBP at the point of transaction, and then it's spent, or you have to manually upload GBP onto the card, either through a bank account or through selling your crypto onto it. How's it taxed? Is it the same disposal idea, or?
Yeah, that's exactly that. It's just a disposal. So if you have to convert it to GBP and then load up the card, at the point of conversion is a taxable moment. If you spend it, if you just tap the card and it converts it automatically every time you spend it, that's all the smaller moments of taxable sort of disposals, if you like. So it might be a loss, might be a gain. It's all about the disposal. So yeah, the only difference between the two is you're converting it all in one go and then spending the GBP later, or you're converting it as you're going along. The net result will be roughly the same. The only differences will be the differentiation in price between the two different points, if you like, of conversion and disposal.
And I suppose it's still the same in terms of that getting that CSV file, downloading the transaction history from the card, and then just plugging that in rather than, I think some people think you have to manually work out every transaction.
I mean, you might have to manually work it out, but if you use software, you don't. And when you download the CSV file from one of those providers, from your portfolio as a whole or that particular wallet, those transactions will be seen on that CSV. So it's not a separate CSV file, it's the same one or the same API key.
Yeah, I think a lot of people look at it as a mechanism, not a tax mechanism necessarily, but a way of avoiding having to off ramp into a bank account.
I mean, yeah, they're right. You don't, I mean, it would bypass off-ramping for a bank account, but the tax doesn't change. It's just a different route.
Yeah, it's really interesting. And a few people have asked, and I've had a few calls on it as well, actually, but they've asked about OTC.
Yeah.
So over the counter crypto purchases, which are normally obviously they're larger purchases, so maybe like over 100K or maybe 50K at the lower end, on ramping, off ramping. I presume the crypto tax for OTC purchases or sales are just the same.
Yes, they are exactly the same. There's no difference from a tax perspective at all. Trying to think of any difference whatsoever apart from logistics. There isn't a difference. If you're selling OTC, you're still disposing of the assets. If you're buying, you're still acquiring the assets, and that's it.
Okay. Yeah, an easy one. Nice. I've just thought of one actually that's from earlier, which maybe not as easy. So, what if we're looking at privacy coins?
Yeah.
I know we talked about what's harder to track and what's easier to track and things like that. So, like a Monero or something, a privacy coin, are they harder to track, or is it?
Yes, they are harder to track. Is it impossible? No, definitely not impossible. It's just a lot harder. So, not saying we do or don't have any clients with privacy coins, but if we did, we would only want to take them on if we could confidently see where it's coming from and going to with the help of the client. One, because it costs too much for us to deal with this voluntarily. We'd usually only deal with this in a forensics sort of case where someone wants us paying us specifically to find out and do this sort of tougher work. So saving fees. And two, yeah, I try and keep everything as above board as humanly possible, obviously, within this sort of sector. And having a privacy coin does throw that traditional stigma with crypto of it's for crooks, etc., etc. With privacy coins, that stigma kind of rears its ugly head again. Not for me, but for those around. So let's say you want to buy a house or something, and they've asked the accountants, "Oh, can you confirm that you've done all checks?" Blah blah blah. I can't confidently say I know exactly where everything is going when that's involved because I might not. And that could cause issues down the line. So yeah, privacy coins, I get it. I like the idea of privacy with your crypto. It makes sense. But from a crypto perspective, you would obviously need to help us. Sorry, crypto tax perspective, you would always obviously need to help us to bridge that gap. Because although we can do it, you probably don't want to pay us to do it if you can just tell us.
And I know speaking to some people who work in this space that people looking to, for example, use their crypto gains to directly buy a house, like so rather than disposing of it of GBP and then going through it, actually just using the crypto to buy the house directly is challenging enough. If
Yes,
that's if
yeah.
that's a core one like BTC, for example, rather than then having to go into areas like privacy coins and justify.
That's exactly the thought process I had. So we have a good relationship with certain professional organizations that can help with our clients with using crypto to purchase houses outright. Not many firms can do that. Not many people can do that. Not many relationships can make that happen. And I very much doubt if you were involved in security tokens, with Monero, something similar like that, we would be able to achieve what you're trying to achieve here. I doubt it. It's possible, I guess, but yeah, it's just one of the downsides of it, unfortunately.
Depends what you're looking for, I suppose. Let's go further back in time. So let's say you were, I don't know, 2014, 2015, maybe I'm just choosing random year. But back in the day and you invested in crypto and you can't now prove where you bought it from. So for example, you don't have that address or I don't know, the platform doesn't exist anymore or the has moved about so much since then. What do you do from a crypto tax point of view? Do you just track it as far back as you can and that's okay? Or
So you need the full picture as the bottom line, but sometimes that's not possible. So yes, you would try to track it back as far as you can. Now, the blockchain is immutable. So at that point, you might be able to trawl through the blockchain and find out where it came from and eventually find out. And sometimes that can be difficult, but you would really want to go back as far as you can and build up as much of the picture, if not the full picture of I put this amount from my bank into here, it went here, there, and then it's blown up here. If you don't have the full picture, I think you'd have a tough time buying larger assets like a property, especially if you've got privacy tokens involved. But I've not come across anyone that we've not been able to build the full picture and they've got privacy tokens involved and all this that and the other, because if that's the case it's going to be extremely expensive to deal with anyway. So yeah, it's a very complex question, it really is, as to what you can do, and the short answer is your best. Just do your best.
yeah, I mean, if we ignored privacy coins, if it was just traditional, more like kind of BTC, for example, and you bought BTC back in 2014, 2015, you can normally track that back to its point of origin in terms of addresses and stuff.
Yeah, it's a lot of work from my team and the clients, but we normally can, yeah.
So apologies if this is a bit random, but some of these are coming from comments in the video. So
Fine.
yeah, sorry. Let's talk about charity. So if I don't know what figure did I use earlier? 200,000. You make 200,000 in crypto gains and you want to donate some of it to charity, can you donate some of your gains to charity and avoid capital gains tax?
No, is the short answer. What you can do is ignore the whole crypto situation and look up gift aid relief. So if you were to donate to charity and it's a gift aided charity in the UK, well, and you are within the UK tax regime, because I can't speak about the rest of the world at the moment, you can get relief for that by expanding your basic rate band, and that in itself would result in a relief. But if you're thinking that you can just rather than crystallize a gain, you give it away and there's no gain, that's not how it works. You got to think about it like this: you bought it for £1,000, it's now worth £100,000. You've got £99,000 gain here. If you then decide to donate to charity, that's fine. That's up to you. But you don't get the full tax relief on that. It works a different way. So the first thing is the way you think about it as a layperson, the answer is no. But if you are donating to a gift aided charity, there will be some relief somewhere, and it depends on the individuals. You have to be earning a certain amount, for example, in a certain way, for it to be applicable. But yeah, I wouldn't be donating to charity to try and get relief. I would be donating to charity if you want to donate to charity. You won't be as well off in your back pocket if you were to donate. So don't do it for tax purposes. Do it because you want to.
Generally speaking, you do it after you've realized your gains, you've paid your tax on your gains. You can do it from the outcome of that rather than as part of the tax calculation.
Exactly. And even if they accepted, say, Bitcoin as a contribution, it's a disposal, isn't it? You're disposing of Bitcoin. It's a normal process.
Yeah, no, that's perfect. Thank you. If we look at the yield, so I don't know, you stake crypto, you put it on a platform and you're getting interest back, you provide liquidity, the same thing. Is that taxed as income tax, miscellaneous income tax?
Yes, nice and easy. Yeah, staking, yields, rewards, mining, all miscellaneous income at the moment, not interest, specifically not interest.
Yeah. And one question was, when might you have to pay national insurance contributions?
When it is considered self-employment or employment. If it's miscellaneous income, there's no NIC. If it's capital gains, there's no NIC.
So we're looking at essentially trading as a business then.
Correct. It would be considered a business. How and when would it be considered a business? I'm assuming would be the follow-up question. Would be you would have to use the badges of trade, which again I'm pretty sure we spoke about before. So have a look at a previous video, badges of trade, to determine if it is considered a trade or not. A series of 9 questions. And if it is, then it would be, and therefore income tax regime and national insurance, but more is tax deductible. And if it's not, then it might be miscellaneous income or capital gains. If it's not, if it doesn't meet the criteria for the badges of trade, it doesn't mean it's automatically capital gains. It could still be miscellaneous income, for example.
It's all about degrees, isn't it? Those badges of trade. It's making it simple so I can understand.
It's
large degrees trading, small degrees not.
possibly, it's a very complicated area, but yeah, just something to be aware of within that topic of conversation.
If as an individual rather than I think a business or trading, but if just as an individual you mine some crypto, so you just do it at home, not on a huge basis, what tax is due on that?
I would say that would be considered as miscellaneous income, and that would be under the income tax regime, 20, 40, 45% taxes, no national insurance, but your expenses for the mining rig and setup and costs, so electricity, if you can show what is specific and holding exclusively to the business, would all be tax deductible. If it starts to get a bit silly and a bit bigger and all sorts, then it would move into self-employment and be NIC taxable.
What about the electricity costs?
Yeah. So
Yeah.
you would have to find out a way of specifying how much is directly attributable towards the mining rig. How you would do that, there's many ways, I guess. Maybe you take your average over the last few years without it, and then you see what's gone up by, and you can go, okay, roughly this amount. That could be a way, I guess. There's lots of different ways, to be honest. Maybe your provider can tell you specifically what's going on. But yeah, as long as you can separate it from the rest of your household in some appropriate way, and there's a million and one ways to do it, then yes, I can see it being an expense.
No, that's really interesting. Hard fork. So where a blockchain branches and creates another cryptocurrency because it's hard forked, and I know some do it within, but so I'm just thinking for tax purposes, if you've got somebody who holds a cryptocurrency and the blockchain is forked and a new cryptocurrency is created, and they keep their original cryptocurrency and they're given the new cryptocurrency that's created on the new blockchain because of the hard fork, is the new cryptocurrency that they're given essentially free? So you don't need to pay capital gains tax on that.
So I just want to clarify to make sure, because I'll be honest, I get hard forks and soft forks confused from time to time. So the hard fork is where you've got two assets at the end of it, correct?
Yes.
So the first thing to remember is this does not come under the guidance of airdrops. Some people say, "Oh, I've been airdropped." No, 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 no. This is a hard fork, it's a separate situation. So how does the tax work? Now, the guidance states that you can effectively roll the base cost of the original asset into the new asset, if you like, and everything in between. So say the original asset, call it A token, costs you £100, and then there's a hard fork, so you've got A and B token. That £100 base costs, which is irrelevant, it could be completely different to the market value at the time. It could be £1,000 when the split, whatever, it doesn't matter. That £100 cost can be split between the two assets. An appropriate way could be £50 and £50. Maybe this new asset is worth twice as much as this initial asset. So it's a 2-to-1 ratio. So you got 66% and 33% of that £100. So i.e., £66 and £33. Maybe that split's more appropriate. Maybe you don't want to put anything towards it. As long as you make a determination, you can justify it. I would use the market value at the point of split or somewhere around there to justify why I'm doing what I'm doing. You can then effectively roll the base costs. And then when you sell those assets, that's when you crystallize the gains separately and subsequently. Now, that's very bespoke, and I didn't quite expect this question because not many people think about hard forks. With soft forks, you just roll because it's a whole new asset and the first one doesn't exist anymore effectively. You just roll the base cost into the next one. Remember, with all of this, you don't have to. You can crystallize a gain and have a new base cost. So you pay taxes now and you get a higher base cost, pay less taxes later, effectively. But yeah, hard forks, I mean, if it's significant, I would get an accountant just for that specifically.
I think the big one there is that it's my assumption that it was seen as an airdrop, essentially, that it was just a free, you didn't have to do anything, you just received the new one and no tax. So for example, I've spoken to a few people where you've got like Bitcoin Cash from BTC, for example, which was a prime example where some people were given some, as it were, due to the
Hmm.
hard fork. But yeah.
Yeah, absolutely. And you have to remember with the scenario that I gave you in the options, you can do it in a way where what you've just said is effectively what happened. So you've got this hard fork. Option A remains with that £100 base cost, and option B, you go, I'm not allocating anything to that. I'm just not. So it's got a zero base cost, and that's it really. And then you calculate it when you sell it, etc. So it's essentially the same thing. I just try not use the word airdrop because that could imply that it's taxable at the point of receipt and all sorts of, and it's just different. Forks are different to how airdrops work, to be perfectly honest. And I'm a real traditionalist, maxi, when it comes to airdrops, in that it needs to be a proper airdrop. You have done like it's just appeared in your wallet type thing. As opposed to clicking anything. So yeah, be careful with that. But that thought process is not quite right, but the end result is correct, and that mechanism is possible.
Yeah, I think that is quite a complex situation. So yeah, I would agree with what you said originally and ask someone qualified based on your circumstances there rather than kind of taking this as advice. Finally, I think if we end the video on if we're hoping and well, assuming, but hoping that a lot of people are going to make large gains in the next bull market. If somebody wants to, for example, I don't know, move abroad to a more kind of crypto friendly tax jurisdiction, or they want to the tax avoidance that we talked about right at the beginning. What are the kind of things that they should be looking out for, and is it something that Miner and Nephos offer as a service?
It's a very good question. I'll answer it backwards. Do we offer the service? Yes. We can tax plan for those entering and exiting the UK. We don't really publicize that and don't have any marketing campaigns for that at the moment, but we do offer it. The problem here is and I'm sure this will be reflected on our next video when we deal with the budget assumptions, none of this might matter. So at the moment, if you were to leave the UK with assets bought while in the UK, like crypto, for example, and you disposed of them, and you do not fall back into the UK tax system within 5 years, it can be tax-free. There's lots around it, but that's the general, nutshell. So yes, we can help with that because there's many things you need to watch out for. I want to caveat that with by future-proofing this video and say that by November, that might all change. So we need to be proactive about it. As a bit of alpha for your listeners who have made it this far into the video, I suspect that there's going to be some form of exit tax to stop people doing that. That will come into with immediate effect at the end of October. But we can unpack that in the next video. So I just want to, caveat that because I don't want this video to be looked at a year down the line and go, you can. It's like, well, it's out of date now.
Yeah, that's really interesting. I think that 5 years is the one that everyone looks at as well. But yeah, I think it'd be great to do a video on the autumn budget, looking at just the possibilities because we don't know. I mean, there may not be an exit tax. There might be. We don't know at this stage.
Lots of things to unpack with that. Lots of speculation. I have my own views. I also have some solutions or potential solutions depending on risk appetite, but that would need to be a conversation with individuals rather than public in video where it just might not suit everyone.
Exactly. It's more general. And I have sat on calls with anybody that's watching this. I have sat on calls with people looking to get advice from Miner and Nefos in terms of that more of that wealth management offshoring type situation. So again, I can kind of say that they do offer that as a service because Jamie's too modest to big them up. But yeah, no, honestly, thank you so much, Jamie.
My pleasure. Genuinely. I really enjoy. I forgot we were recording at one point, if I'm honest, James. It's just nice to have a chat. And I'm a little bit worse for wear today. Just not feeling 100%, but I still wanted to make sure we're here doing what we can do. And thank you so much for everything that you do for the community as a whole. It's an absolute pleasure. Happy to be back at any point, anytime, just not December or January, because we're going to have our heads firmly in the work.
Yeah, you've got a deadline to meet. No, honestly, yeah, just thank you. I just want to reiterate what I said in probably the first video, which was the reason that I partnered with you and Joe, specifically at Miner, is you're in crypto yourself. It's the down to earth nature of it rather than being a stickler, and it's just easy to talk to you. And it's great to form this partnership. So thank you.
Appreciate it. Thank you.
So that ends this video on UK crypto tax regulations, and hopefully that's helped. But do look out for the other videos where I ask Jamie some more questions. It certainly is a bit of a minefield, quite stressful and complex if you've made a lot of transactions over a period of time. So having someone there who's qualified, experienced and knowledgeable in the field can save you a lot of time. And I'd like to thank Jamie for giving up his time again and sharing his expertise here. And if you're interested in getting specific crypto tax advice with Miner, then you can contact them directly using the link in the description to this video, which will take you to an online inquiry form. And you just need to add my name and YouTube channel in the referrer box, just so they know where you've come from, basically. And a great starting point is also Coinly, the automated crypto tax software that I did a video on in my channel also. And there's a link to sign up for a free Coinly account in the description to this video. If you have any other questions about crypto tax, please do add them in the comments to this video and we'll do our best to answer them in a future video. And if you're interested in more of a tailored approach to your crypto education and you think you'd benefit from having someone look over your shoulder and guide you on your journey, I do offer one-to-one coaching to those who have the desire and means to educate themselves further. And there are links in the description where you can message me and book in a free video call to see if we'd be a good fit. And if you found this content interesting, please do like the video and subscribe to the channel as it really does help. And have a great day.